Hey guys, Michael here. Welcome to day 12's training video. Today we're going to talk a little bit more about price action trading because there's really a lot to this. I mean, trading support and resistance is price action trading. Trading trend lines, bounces, reversals is price action trading. So there's a lot to it. I may, make separate parts for each part of this. But today we're going to talk about it's going to sound familiar because it's kind of what I just did in this current trade that I'm in. So we're going to talk about false breaks and reversals. So just to kind of illustrate it, a false break is when price is could be in a range, or maybe it's moving along a trend line and the price breaks above a significant high or low, but then reverses right back in the opposite direction. And so, let me draw something. I'll show you guys what I mean. So let's say price is in a range. It's moving up, moving down. A false break would be it moved up, broke this high, broke the resistance line, came up here, but then quickly moved right back down to the range. And it'll get a lot of traders trapped up here because people will see this break and they'll buy. And, ask yourself, who's going to buy right here? Breakout traders would be buying, okay? So if somebody enters a buy order here before it reverses back down in, where are they going to set their stop loss at? So there might be some different areas they'll set their stop loss. They may set it right below this resistance that they believe has now turned into support. So they may have a stop loss here. They may put it in the middle of the range, or, they may try to give it some more cushion and set it down towards the low of the range. But what happens is when price reverses back into here and it starts triggering these stop losses, that essentially induces further, more selling pressure. Because if somebody's in a long, what is a stop loss? A stop loss is a sell order. Well, what does selling do? Selling drives the price down. So as price reverses back in here and it starts triggering all these breakout traders' stop losses, it continues to drive price down even more. So whenever there is a way to trade the breakout and there's a way to trade the reversal. So the trade I just did at 91.50 was essentially price moving into an area of, a significant area, a significant support area. And what happens is people will I'm going to draw this again. People who are new to trading will see, let's say price is in a range, and they'll see it moving up to an area. Maybe they're real big bodied candles. They're real large. It's moving quickly, and you'll get a lot of people that FOMO into it. And whenever it reverses, then it catches all these people on the wrong side. So whenever price is moving strong, we've talked about this before, but when it's moving strong with big bodied candles, I'm talking like, candles that have small wicks, big bodies, and it's moving strong into an area of support or resistance, we're not looking. So in this case right here, I would not be looking to long. Absolutely not, as it's moving up. A lot of people FOMO in and try to long, and then as soon as it reverses, they get caught. This is a time with price moving this strong into an area of, an area of resistance. I'm going to be looking to do the opposite. I'm going to be looking to short in this area, and vice versa. If it's moving strong into an area of support, like it did at 91.50, I'm going to be looking to long. So let's continue on, and we're going to go over to the chart, and I'm going to show you some examples of this, and I'm going to show you the example of the one that I'm in right now. So the stronger the momentum into the area of value, into the support or into the resistance or into the top of the range or the bottom of the range, the stronger it moves into it, the more likely it is that it's going to reverse, which is kind of counterintuitive, I think is the way you say it, to, somebody new coming in, their way of thinking, they're going to see price moving strong into a direction. They're like, oh God, I'm going to miss out on it. I'm going to miss out on it. And they all start FOMOing in, and bam, when it hits that area of resistance or that support, and you got people with limit orders in right there at those areas, causing price to reverse, all these people get stuck in this trade. So not only do you have, let's draw up the range again. So not only do you have the people that are FOMOing in, that are setting their stop losses and stuff, but you have a bunch of sellers up here too with limit orders in. So they end up driving price down. Their big orders drive price down. Triggering these stop losses continue to drive price down. So this is, an area where we want to trade a reversal. Now, how you would trade a breakout is the opposite. If you want to trade a breakout, one more thing about reversals. As said here, the stronger the momentum, the better. I don't want to see stair-stepping or price basically moving slowly into an area of support or resistance. I want to see big, strong candles into it. So let's say I'm looking to go long at the support. I don't want to see price coming down to it like this. There's a reason why. If it looks like this, I don't want to buy. If it looked like it was coming straight down into it with big candles, then I would look to buy it. But why don't I want to look to buy here? So let's say I put a buy order in here. What happens is all these little bounces are now areas that people are going to have sell orders in. You're going to have sellers at every one of these little swing highs, these little local high, whatever you want to call it. Every one of these swings up right here could be an area of resistance as price comes back up. So we're going to hit it, and maybe it gets rejected a little bit and comes up to the next one right here. And the higher it goes, you're just going to get more and more sellers. So it just basically decreases the likelihood that our trade is going to be profitable, because you don't know how many sellers are going to be at each one of these levels, and it could send price right back down, and your trade then be negative. So we want to see strong moves into it to trade reversals, just like I did on the trade that I'm in right now. Next part. Let me get this pin off. Like I said, avoid stair-stepping price action. We want to see strong moves into it. And breakout traders, whenever they trade the breakout and their stop losses get triggered, it's going to continue to drive price down. Or if it's, if they're shorting and they have their stop losses up higher, those are buy orders that would continue. And then when those stop losses got hit from a short, which would be a buy order, it would drive price up even higher. So let's look at the chart real quick, and I'll show you. So here is Bitcoin, where you can see it was trading inside of a range here. And look at the areas that I have highlighted here. So look at this big bodied candle. People see this and they see this breakout, man, and they FOMO in, and then bam, price reverses. But this kind of big bodied candle, if I seen this moving into the top of the range, or if it's moving into a resistance area, I think if I zoomed out, this would be a resistance area. Excuse me. If I see candles like this, I'm looking to short immediately, especially if you can get it, at the top, right above the top of the range. Once, trying to determine exactly where it's going to reverse, nobody knows the exact top or the exact bottom ever. But this kind of movement, this kind of price action into our area of resistance would be a great opportunity to short, because you're going to have breakout traders here that are going to put in longs, and they're going to have their stop losses down here. And look, when price came back down, it just continued to drive it back down, all the way back down to the bottom of the range. And then the same down here. We had a false break. It attempted to break out. People started shorting here. We had some large bodied candles. These ones are kind of big here, especially this one coming out of it. And then when it reverses, it started triggering everybody's stop losses. And we had some big green candles coming right back up into the range. The other example I have is same kind of concept. This one's even, I think, a little bit better. You can see large body candles moving into our area of value, and then it reverses quickly. Almost one candle, one hour candle almost reached the whole bottom of the range because we're trading inside this range. And this is the kind of price action into an area of support or resistance that I'm looking to trade a reversal. An example of an area or an example of price action where I'd be looking to trade a breakout would be like an ascending or descending triangle. So what does that look like? Let's do a descending triangle. So we got price coming up, coming down, and we have the stair stepping action essentially, and then it starts to build up, accumulate, consolidate underneath or right above the support. This would be a breakout trade that I would be looking to take. Or if we're looking at it the other way, an ascending triangle, price coming up and then begins to accumulate, consolidate right under the resistance. This would be breakout trade setups. Strong moves into the support or resistance are reversal trade setups. So let's look over at Bitcoin now in the trade that I'm currently in. And this is a perfect example. So my entry was below, I think it was like 91.87, but I added to it once it went into profit, because just the same way we ladder into trades when there are losses, but when a trade goes into profit and I think it's going to continue going into even more profit, I'll add more to it. So I started buying more up here, so it raised my entry up to 92.19, and I have a trailing stop set currently at 100, meaning that price is currently at 94.33. That means it will set my stop loss $100 away. And as price moves up, it'll stay $100 away. If price reverses, it'll hold. So you can see my stop loss right now is at 93.42. That means that price was all the way up at 94.42 at one point, because 93.42 plus 100 is 94.42. But when it started to come back down, my stop loss stayed at 93.42. Now, as it moves up, it'll move my stop loss up 100, staying $100 behind. But I knew 91.50 was a strong area of support. Just, we can't see a lot of history on this chart, but there's some examples over here. Let's look at my chart. Let's go to the 4 hour. $91.50, right in this area. So we have support, some support over here, lots of support right here. So I knew it was an area to pay attention to. And whenever price moved these big, large candles into it, a lot of people had shorts, I bet, going in here. And the reason why we're getting this reversal so strong is the people that put their shorts in, all their stop losses are getting hit now. And it's starting to, and those a stop loss for a short is a buy order. So when their stop loss gets hit, they're buys because they were in a short, and it's driving price up even higher. You can see my stop loss now moved to 93.44 because price just moved up to 94.44. So this strong move into an area of support is not a breakout. You know, that's why I was in the group earlier and I said I was placing a trade. Somebody asked if I was going long. I was like, well, absolutely. Like, we know 91.50 is support. I'm not going to short support. Like, that's insane. You know, you're going to long it. Now, could price have broken down and just continued lower? Sure. But I would have had an area that I would have, looked, we know 9,000 would have then been support. If it broke below 9,000, then I probably would have got out of it. But I was banking on 91.50 being a reversal location. So I got into it. I seen the strong big body candles moving into it. I didn't see a laddered stair step. It was strong. It was quick. It literally happened, within a few minutes. We seen it drive down, and I jumped into a long. And look, it's still continuing. I'm up 10%, almost 11% now. So that's well, it's really moving now. So I'm just going to leave this. I'm going to leave my trailing stop. You can see it's now moved up to 93.80, and I'll let it ride as high as it'll go. And then when it finally decides to reverse and come back down, then it'll trigger my stop loss, which is in profit. So my entry's here, my stop loss is up here, and I don't have to worry about it. Up almost 11% now. So that is a price action trading strategy that you can use that I just used on this trade. Big candles, like right here, everybody panicked. Where did it get stopped at? Let's look at the other chart. This big candle. So we came down to almost to the 91.50 area. So we enter, and remember, these aren't exact prices. It came down to, about 9,200. But it came down to an area of support. So we know this whole area is going to be support. This whole area was support. So this big candle move yesterday, this little, some people call it a dump. It ain't much of a dump. But this big move is not a time to jump into a short. Like, I don't think I was paying attention at the time. Or when I was, it was already back up here and I didn't want to get into it. But had I been watching this move down into an area of support this strong like this, I may have jumped into a long here, and look how quick it ended up being a long wick and then reverse back up. Trying to, figure out the exact bottom of it is the hard part. I mean, look at, we had this long one that ended up with a long wick, but it stopped at around 8,200, which we know is an area of, so I have a line there, so it's got to be an area of support. We've had several bounces, 3 bounces off of that location. 3 times we had long wicks on candles from this location around 81.70. So, and we know that's an area of support. So that is the strategy I use when I'm trading reversals. I'm looking for big bodied candles, big moves, large swings into an area of support. Not to trade a breakout, but to trade a reversal. So I hope that makes sense, guys. I hope you jumped in this trade too. I know some of you did. If you did, then get you a trailing stop set and you're good to go. So I will talk to you guys later.